Hey traders, welcome to Profiling to Profit, the week ahead in futures. It is September 17th, 2016. Hope everybody has a nice weekend. Hope it's going well for you. Last week was quadruple witching day on Friday. We are past that, and all eyes are on the FOMC meeting this week, which starts on Tuesday, and the announcement will happen on Wednesday. We'll talk about that here in a second. This week was an interesting week. We'll look at the charts. We had just a nice rally into the week. We're going to talk a little bit about that. We call that the low before the expiration. So let's take a look at quickly the news before we get into charts. Coming up this week, as we said, FOMC meeting begins here, which is the Fed meeting in the U.S. on Tuesday, and then that's going to be followed up by an interest rate decision on Wednesday. Of course, we have the EIA petroleum status report. And then it's pretty quiet the rest of the week in the U.S. But we do have a regional Fed president's panel. I don't think that's going to have any impact on the market here. However, around the world, there's a couple things we need to keep our eyes on. On Wednesday, especially in the morning, very early in the morning in the U.S., but we have obviously the interest rate decision out of the Bank of Japan, and of course a monetary policy statement. You got to keep your eye on this one. The Bank of Japan has a tendency to move markets when they come out with these decisions. And then, of course, follow that up later in the day with the FOMC announcement and the interest rate decision there. So there will be plenty of fireworks on Wednesday. Then on the Thursday, our friend overseas, Mario Draghi, is going to be speaking. So when he speaks, anything can happen. So again, Euro traders, keep an eye on that. Other than that, it sort of dies off into Friday. So let's jump into the charts. Let's talk about this. Last week we talked about the low before before options expiration. There is a theory, and it's a pretty solid theory, made famous by Marty Schwartz in his book Pitbull, that the week before options expiration, usually Thursday or Friday prior to that, we see a low in the marketplace and we rally into that options expiration date, which pretty close we did. We made a low actually Monday morning in the Globex session, and then on the open we went ahead and just rallied straight up from there. Obviously lower high, or excuse me, higher low, apologize. And then now we're way up here. We finished way at the top of the profile here on the week. And by the way, as I always say, these mini profiles are 1 week profile. The candles are 2-hour candles. And of course, we have the larger profile to the right. So we broke through. We were short in this area. We thought this would roll over and go down and get our zone in this 45 area. This thing busted back up the zone. Top of the zone held us. Second time up, it held us. Third time, it blew us out. So we got stopped out for a small dinger on this one. Not a bad. We actually made a little bit of money in here, but nothing to write home about. And then, of course, we started balancing at the top of the week here. We are back into this congestion zone, and we are really how many points away? That's 1639. So we're about 17 points away from all-time highs in the Nasdaq. Pretty high likelihood that we could see those highs, especially if Apple keeps going. Now, Apple was the savior last week. Apple had a tremendous move. Let's go take a look at Apple. I wasn't planning on looking at it, but we will take a look at it anyway. Straight off the open this week on Monday, Apple has absolutely been on a tear. I mean, from 101.79 to the high of 116.13. That is an amazing move right there, and that's what's been leading the Nasdaq on this thing. Now, let's go back to the Nasdaq real quick. All right, the Nasdaq, prices are going to need, for the bulls to stay in control of this Nasdaq, first we're going to need Apple to maintain, the price. In other words, we can't let price drop from where it was, or we can't let it drop too far. But the zone for the Nasdaq we got to watch is this 47.64 down into the 47.42 area. This is a zone now the price has to hold if the bulls want to go ahead and take out for new highs at 48.39. However, we got a small problem here. If we go over to the ES here, and also the same is for the Russell, while the Nasdaq was rallying hard with Apple, the ES was not rallying hard. It took up the top of a risk zone, went to almost to the tick to the top of the risk zone, and then rolled back over and did not take that high out by then. So right now in the ES, the bears are still in control. On the Nasdaq, the bulls are in control. So right here, for any bull to get to take control of this market in the ES, it's going to have to break above that 2152 area for them, or just might as well say 150 or 2153 for them to take over the Nasdaq here, or excuse me, to join the Nasdaq and have this bullish look on things. So we have a little bit of a divergence in here. The Russell is the same way. Let's go take a look at the Russell. Again, a little bit of diversion. The Russell needs to stay below this 1231 area for the bears to remain in control. If they do remain in control and take out last week's lows, then they could have a nice move down in this 1170 area. Let's go back to the ES. I'm sorry, I'm jumping around a little bit here, but we need to take a look at this. If the ES is taken out down here in the 2110, then of course the next stop on the bus is at 2093 down there, so could have a nice move down there. So keep an eye on the indexes and the divergence that's happening in between the the three indexes. All right, so let's go over and take a look at crude now. Crude's turning. You know what? Crude is getting ready to be a very nice trade in here, and I want everybody to keep this on their watch list. Crude has been winding in here, and crude, as you know, doesn't wind long before it starts taking off again. I suspect we'll see some movement again, and when it does move, I suspect we'll see a pretty darn good move. Once we break out either these lows or these highs, I will expect at least $10 move. Longer term, not shorter term, but longer term. So what's going to happen, or what could happen in the shorter term area? Well, first we got to get out of this congestion zone. We've been, for 3 weeks straight, we've been just going sideways. They tried to break it out to the upside. They failed. They came back down into the zone or the range, and they've just been chopping sideways. We sold off pretty heavy last week. In the crude. If they take out these lows at 42.99, then we have a good chance of going down and testing this lower support area. And then there's some balance down here at 40.86. Now, if they take this out, the upper zone or lower zone here, then these value areas on the larger time frames have a great opportunity of getting taken out. In other words, or at least tested. The 50.16, or excuse me, the 50.21 area to the upside, that's value area high, and then the value area low down here would be the 37.54. Right now, crude is feeling really weak in here. We suspect that crude will take out these lows this week, or at least test them, and then the next stop would be the lower trend line here as well. So keep an eye on crude. I think there's some fireworks getting ready to happen in there. Our friend gold. Gold's feeling pretty heavy in here, and we'll show you why we think gold is heavy in here, and we think that gold's about ready to roll over a little bit. Now, again, gold got back above our zone that we had drawn up here. I took it down and then broke back below. It has been going sideways. If we pull out this a larger profile, we've had sort of a double profile here. Right now the resistance is right in here in the low volume area between the 2 weeks. If price is able to hold down these levels at 1332 up into that 1337 area, if you want to go wider to 1340, that's fine. That's your risk zone to the short side. If we get back up there and we hold it, then we have a good chance of coming down into that 1294, 1285 area. Now remember, we have FOMC. Try not to, I'm not saying do not, but try not to step in front of that, because gold will most likely move off of an announcement here in the United States, and will also probably move off the Bank of Japan too. So be careful with this. You may have to wait till after Wednesday to establish a position, and we may not even get the chance. If this continues to sell and things look bad, and the dollar rallies, and that's what we want to look up now. If the dollar rallies, this thing could become toast real quick, and we could see a very nice move or extended move. So watch those areas. If we do have a chance to rally up in here very early in the week, like Monday or early Tuesday, then manage your risk. And then either hedge the trade going into the meeting, or just go ahead and take it off going into the meeting. Your choice on that. So let's go ahead and look at the dollar. Dollar right now, again, if we pull out a little bit, dollar has been going sideways for a little bit. But if you notice, we have a low, we have a higher low, we have a higher low. What we need to do is we need to see this 90, what's the number on this one? 96.25 needs to get taken out. Okay, right? We had dollar rallied hard last week along with the market. If the dollar continues to rally, takes out that 96.25, then we could have a straight shot up to 97.44. Test these highs up here and maybe even take them out. That will not bode well for gold. We should see gold roll over at that time. So keep an eye on the dollar as we watch gold as well. Guys, I know Mario's speaking this week, and I got the wrong symbol in there. I apologize. All right, I know Mario's speaking this week, but there's nothing to do in the euro. This is just chop and slop, and the only thing you really can do in here is day trade, and we're not day traders, so we're just going to avoid this for now. It is winding. It's getting a little tighter. Something's going to have to give on the euro. I'm not sure when, but something's going to have to give eventually. So right now, nothing to do in the euro. Avoid it. If you're trading it, trade it at your own perils. Trade of the last few weeks for us was the notes. Notes were great. After the breakout, we got short down the breakdown. We got short on the breakdown. Price came back and tested our breakdown area, and then went down and tested and met our second target. So we hit both targets in here, guys. Go back and study this. If you have not watched our videos in the past few weeks, go ahead and take a look at them. We had this nice congestion. We had 1, 2, 3, 4, 5, 6, 7 weeks of congestion, and usually a move breaks, whether up or down, out of a congestion area or a high volume area, as you see over here. And when it does, it tends to move for a while, especially on higher time frames. If we remove this over to let's go to a daily and see what it looks like. Same thing on the daily. If you look at it on the daily side of things, we had the very nice move sideways, and then boom, nice move out, right? So we had 1, 2, 3, 4, 5, 6, 7 days of sideways action, and then we broke down on the deal. It provided us 2 nice targets, very nice income off this trade. We didn't take any heat on this trade at all. It was very, very nice. So go ahead and back and take a look at this trade, see how it's set up, how these prices move, see how the profile allowed you to get into the trade, because once we broke down below, we can know where our stops are based on how the profile is set up and where volume areas are, where value area lows are, value area highs are, etc., etc. And I'll show you where you can learn more about that if you're confused about that terminology. So right now there's nothing going on in the, well, I say nothing, but the notes don't have anything going on. We're flat the notes at this point in time. Price needs to hold below this 31 or 131.17 area. If price does hold below that, then they have a great chance of taking out these last week's lows at 129.26, and then there would be a great chance of going down and test this value area low at 128.04. The bonds are at the same thing. Bonds had a nice move. As a matter of fact, I sort of wish I was on this bond trade. I did not get on the bond trade. I don't get in many bonds, but I got to tell you, this was a beauty here. So if you got this trade based on our video, man, you had a great trade here. Congratulations. As a matter of fact, you could actually still be in this trade. But if you're not, that's okay. We have a zone up here identified, 169.30 up to 170.17. Nope, take that back. That's a wrong zone. I apologize. Is that the right zone? I'm going to say the zone is 170 even to 170.16. 170 even to 170.16. Apologize about that. Same area here, guys. That's the zone, the risk zone. If we can stay below that, we have a great chance of going down and testing this POC at 162.26. Now, price may not get back up here. It's all going to depend on FOMC. If we get a nice rally at FOMC, this may give us a chance to get in this thing and roll back over again. Would love to take advantage of that one. I like the POC coming up here shortly. Whether we get the chance or not, we have to wait, but we're not going to jump into this thing early. All right, let's get on to the grains here. Not a lot in the grains, guys. I know day traders are going crazy over grains. They're catching 1-2 day moves in this. That's a great trade if it fits your model. It doesn't fit ours. Grains are feeling a bit heavy in here. Grains sold off early. That's they say grains. The soybeans sold off early, rallied late in the week. We do have a lot of volume down here, but we have a one, two, three bottoms in here in soybeans. If soybeans goes down for the third time, I'm expecting to move down below that, and it could wash out stops of people who are trying to guess this market down here. Right now, bears are totally in control. The reports are coming out that crops are phenomenal. I've been hearing nothing but good things out of the fields right now. All the beans look healthy, plenty of moisture, plenty of sunshine, of course. So I expect yields to be very high, which would drive down prices. Let's go ahead and take a look at the corn. Corn is the same way. We're holding down below the zone that we've been identifying now for, my goodness, almost 6 weeks now. We said, hey, listen, anything below $3.46, the bears are in control. There was a chance that on this flush down here in this rally, there was a chance that we could move back up above there, but we would have needed a bad crop report, and we didn't get that. We got a very bearish crop report, and when a bearish crop report in the grains is one that yields are going to be high, that drives prices down, supply and demand type of situation. So right now, we don't expect any rally until probably October on both soybeans and corn. Now that doesn't mean it can't rally. If it gets above this 346, we could see a very nice rally into 368. Typically on a seasonality basis, once October hits and harvest is in full swing, then we'll start to see a slight rally into the end of harvest. But we can keep an eye on this. But there could be more pressure on these grains just because the yields are going to be phenomenal this year. So keep an eye on it. Nothing going on. We're flat grains right now going in the harvest, and we'll just keep an eye. I think there's more trades and better trades here in the next few weeks and maybe even in a month. So other than that, guys, let's head back over to the website. I talked about the jargon, some resources for you guys. Let's take a look at this. You go to our website, Market Profile Trading Academy, go over to free resources, go down and look at the videos. There's loads of videos here. There's education on trade management, execution, and trade psychology. Looking at market profile examples. These are great webinars on that Josh has done, and he does a phenomenal job on explaining market profile. And there's a lot of good jargon in there to help you understand how market profile could enhance your trade and help your trade as well. So guys, get on over to the website, sign up for our free Secrets of Trading Success on the ebook. Take advantage of all the free resources on here. And if you do have any questions, do not hesitate to contact us. We're an open book. We will go ahead and connect back with you and answer any and all questions for you. Other than that, have a great week. Trade well, keep your powder dry, and we will talk to you next week. Take care.